Google is launching like it just discovered a second internet. Welcome to Dayrade Daily, my people. The show where we trade the chaos, not the bedtime stories. And today, we are feasting on this Google Moonshot, TSLA crater, and AAPL grind. So smash like and subscribe, or the market gods will route your best idea to the worst fill.
Google is up like 15%, written in fire letters. My heart is printing new all-time highs, and it is literally Wednesday, December 24, 2025, which means Santa skipped the cookies and bought call sweeps instead.
Relax, jet engine. Google ripped because it crushed ad expectations and guided like the world never heard of recessions. But if you chase this gap on the first green candle, you are donating to whoever faded .com bubbles for a living.
Structurally, this Google move screams institutional pile-in, huge liquidity spike and aggressive pre-market bidding. So, intraday, I want opening range breakout, only if it holds that first consolidation. Otherwise, I am hunting exhaustion to short against clear highs, not guessing in the middle.
Translation, my people. Trade Google like a royal procession. You either bow to the trend with tight risk, or you wait outside the castle and fade the parade when the music stops. Just do not stand in the middle juggling limit orders.
Okay, but real talk. How are you not long Google off that opening drive when Reddit is writing hymns about it? This is social sentiment karaoke. Everyone is screaming the same chorus, and I want to solo over it.
Because some of us like living. Crowd is euphoric. Overall volatility around 75% means big rips and big face plants. So my Google play is wait for it to break trend, reclaim VWAP, and then fade the broken believers. Not shorting in front of a train.
See, this is why my community loves me more than Grizz. I am taking the first clean Google flag over VWAP with half size, and if it fails twice, I eject instantly and blame the algos, not my ego.
Honestly, both sides are valid. The mistake new traders make with a monster like Google is going max leverage on the first candle, then revenge trading 5 more times if they get wicked out, instead of taking 1 or 2 highly structured stabs.
Revenge trading is my cardiorespiratory workout. But yeah, intraday I like GOGL as an opening drive scalp with bracket orders. Then I am done. Because if I keep poking it, I end the day explaining to my landlord why ad tech ate the rent.
Before we drown in Google candles, quick reminder, hit like and subscribe because the algorithm only respects accounts backed by our collective chaos. And apparently, your thumbs fund Jet's doctor visits.
Speaking of medical events, TSLA down roughly 5% is a personality test. If you are buying every red candle because memes told you diamond hands, you are exactly who this tape is built to harvest.
TSLA red makes my brain want to long every tick, but this is pure post-hype hangover. Earnings guidance softer than my sleep schedule, and everyone unwinding margin at once. So I am only shorting intraday pops into clear resistance, not bottom fishing the crater.
Nah, my people, TSLA is a religion, and right now, the prophets are rage tweeting, which is actually my favorite short setup. Gap down, weak bounces, break yesterday low, and I am riding that like a fallen cult leader selling autographs.
Importantly, Tesla volume is heavy and skewed towards selling, so I like a measured fade strategy. Wait for it to retest VWAP, and if that level rejects with strong selling pressure, you short against it with a tight stop, instead of guessing where the actual low lives.
Look at Orin pretending he never worshipped beta. But he is right. This is not 2021. You do not marry TSLA here intraday. You date the bounce and ghost the second it texts you a new low.
So Google party, TSLA funeral. What is Apple doing besides vibing this thing moving like 25%? In a dignified march, is the boomer at the rave sipping water and leaving before midnight?
AAPL is the responsibility trade, my people. Slow grind higher after solid product cycle chatter. Plus, buyback flex. So intraday, I like buying dips toward prior breakout levels and selling into strength. Not expecting fireworks, just dependable trend for scaling.
Exactly. AAPL is your paycheck stock in this tape, not your lottery ticket. Trade it with patience. Wait for pullbacks that hold VWAP and higher lows. And stop trying to force parabolic dreams on a company older than your trading account.
And macro-wise, AAPL plus Google driving this tech tilt matters. When those two are strong, it often drags the whole growth complex, so intraday you can use them as a risk barometer. If both roll together, maybe stop buying every tiny dip in your favorite small caps.
Wait, are you saying I should stop scalping random stuff because the big dog sneezed? Impossible, but fine. Using AAPL and GOOGL as mood rings means at least my overtrading will be better targeted.
Trading tip wrapped in chaos, my people. If your account is under 5 figures and you are trading both TSLA and GOOGL and 3 side quests at once, you are not diversified. You are just lagged on 7 ways to blow up.
From the guy who once opened 20 positions before breakfast, another quick tip. Use hard stops on these names in a 75% volatility environment, or your soft brain will move the mental stop every candle until your account does interpretive dance.
Speaking of interpretive dance, my boarding school had this weird equities club where people backtested chart patterns on chalkboards. And honestly, this tape looks like those drawings. Volatility everywhere, but only a few real edges you can actually trade.
Wait, your childhood side quest was chalkboard backtesting. Mine was trying to overclock a console for frame advantage. We are not the same species, and somehow we ended up at the same table.
Gentle derailment aside, the key in this overall volatile tape is choose your focus. Either you trade GOOGL and AAPL as clean trend names, or you lean into TSLA mean reversion. But stop treating every ticker like a slot machine lever.
And if you appreciate us herding Jet's brain back to the market, press like and tap subscribe. It tells the algorithm you prefer volatile honesty to fake calm gurus.
Alright, lightning brains, let us hit some intraday setups. GOGL first. I want opening range breakout long if it clears first 5-minute high with strong volume. And I cut it brutally if it stuffs that candle. No averaging, no coping, just out.
I like the Google fade also, but only after a clear parabolic extension. If it makes a huge spike, then prints a lower high with selling pressure. That is my short entry, with a stop just above that failed high, not somewhere vague like feels bad zone.
TSLA for me is classic pop and drop. Big gap down from disappointing chatter. Then every rally into prior support is short bait. I will hit it near those levels with tight stops and take profits on flushes, instead of dreaming about catching the exact bottom or top.
AAPL playbook is boring. In the best way, my people. I am buying pullbacks that respect VWAP. Ideally after a little shakeout, and scaling out into strength. Dream scenario, slow trend day, where chat keeps screaming moon and we quietly stack base hits.
Also, friendly reminder, if the spreads look like a canyon, your size should look like a polite apology, especially in this 75% volatility jungle. Thin liquidity plus hero size equals highlight reel of regret.
Can we mention risk one more time? With this kind of market, you want your worst trade of the day still survivable, not existential. So predefine your daily loss limit before the open, or emotions will do it for you at exactly the wrong moment.
That was almost touching. All right, degenerates. Prediction lightning round time. No hedging, no nuance, just overconfident takes. The internet will forget by tomorrow.
Bold call number 1. Google holds most of this moonshot, and we get one more face-ripping squeeze today, my people. If Reddit keeps writing love poems, I would not be shocked to see another 10% style attempt intraday.
My turn. TSLA does the evil bounce. It rips a sneaky 3 to 5% just to trap dip buyers, then rolls over so hard that my broker emails me emotional support resources.
I will go civilized. AAPL just grinds in a civilized channel and ends the day within maybe 3% of its open, being the adult in the room while everything else screams and throws confetti.
My second one. Google closes red to flat after shaking everyone by lunch. Late longs get cooked, late shorts get cooked, and only the patient traders you ignored all episode quietly withdraw money like adults.
Final prophecy, my people. Social sentiment stays so deranged that by the close, someone launches a new religion where market makers are dragons guarding Google options and TSLA puts are the dragon slayers. I fully support this law as long as you respect your risk.
Whatever actually happens, trade the levels, not the fantasies. Manage your size. And if this chaos helped you at all, hit like, subscribe, and come back tomorrow so we can scream at more candles together.